Aloha everyone, Joshua Hayes at BigWaveTrading.com. The market bounced today. Can't say that it caught anybody by surprise if you watched my weekend video lesson or read the commentary this weekend. Told you the put call got extremely high, the CNN Greed and Fear Index extremely low, and there was basically positive divergence showing up in my current long positions that I'm either long or tracking on an end-of-day basis for the website. A positive divergence in my perfect speculator scan compared to the recent lows, and overall positive divergence in the NYSE advanced decline line relative to the S&P 500. And as you can see, we bounced right off the 200-day moving average today. Nice move. We took out the intraday highs on Friday. Strong close on the S&P 500. Hard to be mad about anything that I saw today. Dow Jones Industrial Average, successful test at the February lows and 200-day moving average, also closing above the intraday highs on Friday. The NASDAQ, one of the more powerful ones on the session, closing above the intraday highs on Friday, and NASDAQ 100 up nearly 4%, trying to rally back to its 50-day moving average, but more positive divergence overall. And the Russell 2000 bouncing right off that uptrend line, the red line that's sloping up here. Very good session. It did not take out Friday's highs though, but the Russell 2000 has been showing relative strength lately, so that could be why. But overall, so far it's a good bounce, but now it's all about how this bounce plays out. While my long positions actually held up well going into today, and today obviously I had fantastic breadth, I still had a few stocks that straight up crashed, and thank goodness for stops because I didn't get hurt on any of them. But before we go to the new longs, let me show you some of the full sell signals. There was quite a few. CNIT has now completely rolled over from the initial long position signal way back here, but it's completely rolled over the sets of 3 lower highs and 3 lower lows on above average volume below the 50-day moving average, so that one failed. CTSO was a recent long here. That one completely failed today. DDS, Dillard's, earnings winner, long position, that failed today. So that one was knocked out. QRHC, a recent new long position, that one basically failed today. Let's see. Ken failed. Ignore all of this, but with that close below this support level, which is basically equal to that, just Telechart doesn't adjust for dividend adjustments. It's stupid, but that's what they do. Ken fully failed today, and then there's 3 kind of ugly crashers. CUE, thank goodness for tight stops, had tons of stops, basically left for profits on everything until today, and small losses on the rest. But CUE, I'm completely out. My final stop was right there, Friday's low a day. But CUE, you can see that crashed to its 50-day moving average despite a strong up day today. And BNSO, holy moly, moved all my stops up to this low right here following the erratic price action, following the long signal with it losing its green BOP and the BOP going negative. Final stop was right here. Good thing I did that. Intraday, I was knocked out. See, 350.45, so 344 is where my stop at. I believe it triggered like at 342. Boom, look what happened by the end of the day, BNSO. And then the creme de la creme of all the failures, PTGX. Luckily, after this day, it gave a 20% profit-taking signal, so I went ahead and did that. Then I moved one stop below the 312 low a day, had a stop below the 39 low a day, had a stop below the 3.5 low a day, and as you can see, all of those were taken out over the last few sessions. And oddly enough, because I only had a small position to begin with, got so many basically partial profit taking signals coming into today, I only had 2 shares left. It's a very, 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 very lucky situation, being already fully invested whenever the long signal came. Still wanted to take some of it. Knew that it had phase 3 data coming out, so I wouldn't have gone big anyway, but good thing I only had 2 shares left. Thing crashed 60% today. So it's not smooth sailing out there, but besides that, everything else did very, very, very well. PPS was 50%, FT&W was a 50% sell signal, and so was HCLP, but overall, everything else much higher, which then leads us to our new long positions. I have quite a few new long positions, but once again, None of these are perfect, so don't think that these are just guaranteed to work, but I have to go long them because they're high quality stocks. They come from either my CanSlim Perfect Speculator or it's an initial public offering scan, so I got to take them. But ATRA, Perfect Speculator stock, you got the confirmation of volume BOP, pocket pivot point signal off the 50-day moving average. Definitely want to get long here. 2% of my capital, 41.50. First cut loss 38.10. Second cut loss 34.70. Final cut loss 30.95 for start. So I'll have thirds split up initially between all of those lows on ATRA, but that's a 2% long position. FSCT came from my initial public offering scan. It interested me here. It, of course, caught my eye again on Friday since it was actually up and had the 3 days of max green bop. Well, now, fourth day of max green bop, candle over candle, above average volume, heavier volume. Want to get long, 2% of my capital, 31.55. First cut loss, 29.15. Final cut loss 26.84. And just like with the last stock, the first stop level goes before the last level comes into play. If it loses its catalyst, i.e. pulls back on heavier volume or loses the green bop, we're moving half to all of our stops higher. But FSCT, ATRA are the 2% new long positions. NKTR, 1.5% of my account capital. It's slightly extended from the 20-day moving average. Want to get long, 107.03. First stop, 102.78. Second stop, 99.15. Third stop, 96.01. Final stop, 86.99. If these levels go, I do not plan this stop ever coming into play. It's an emergency final stop. But NKTR, 1.5% of my capital. And then the two remaining long positions, EGAN and RFIL. Two lower price perfect speculator quality stocks. EGAN was also in my price volume BOP surge scan and in my new 52-week highs on above average volume scan. And RFIL is also technically a lower price CanSlim quality stock. So despite being in extra scans and everything, since RFIL is extended and EGAN has such a wide price range, up 11% today, I only want to do 1% of my capital in each. We'll do RFIL first, 465 the limit order, first cut loss 436, second cut loss my 20-day moving average. Right now it's dynamic, so it's 382. It'll be higher tomorrow, 390 or something. And then the final cut loss for now, which will never come into play, it's emergency only in case of gap fill, 360. And for EGAN, because it's such a big wide bar overall, as you can see, relative to its previous price pattern. By the way, I wanted the stock here, I wanted it here, I wanted it here, so I got to get long EGAN. But what I'm going to do is I'm getting long at the pivot point. The pivot point is $8. Where is it? There's the 8 right there. Normally it's 1 cent above the pivot point level, but since it's a 5-cent stock, it's 8.05. So my limit order will be at 8.05. First cut loss 7.05, and for now the final cut loss 6.50, but I'm not using the close 8.25. I'm using 8.05. And then add positions. MGPI from the CanSlim scan was just shaken out of a little bit on Friday when it closed below this low. I split my stops up and raised one to right here, was shaken out Friday. Have an add signal with the BOP increasing and the good price action. It's an earnings winner. MGPI, 0.5% of my account capital since it's an add and extended. 86.94. First cut loss 83.89. Final cut loss 80.34. Also add signal. ANAB, this should be 1.5%, but I see this evening there's positive data and the stock is now up an extra 10% after hours, so it's up 15%. So I don't know if I'll be able to add to my position, but if I can, 114.58, 107.25, your first cut loss level. Then all the way back here, 103.59, 97.91, 91, split it up, but I would have half here. And then on the remaining half, a third here, and a third here to add to my position that I already have. And the final add signal and the best add signal, SKY. This is the kind of chart pattern that I would normally say that I like a lot and that I would go as far as saying that I love. if a few things were here. I would like it a lot if the market was a bit less volatile right now, but if we're going to go down 3% one day and up 4% the next day, you can be sure I don't really love anything right here. But if this thing could have kept its max green bop from that gap up off the earnings victory or the contract or whatever the hell the gap up was for, and if it could have kept max green bop and or even just green bop all the way to today's signal, I would quote love this pattern. But as it is, I just like it a lot. Like that bop surge back to green, heavier above average volume on the pocket pivot point signal, engulfing hammer candle. When I add to my long position, 2.5% of my capital. It's perfect speculator quality, it's canceling quality, and it was in my price volume bop surge scam. It's an ad signal, so only 2.5%. 23.80. First cut loss 22.52. Second cut loss 21.73. Fourth 2023. Final 18.87. Half of it obviously is going to be these two levels here, but you can be sure that these two price levels will never come into play unless it crashes on Tuesday. But that's it. It's a lot, but volatile markets cause me to do a lot of positions. Now, overall, you'll see these are 8 signals for me, $8 in commission. Even if you take 2 trades, most people will be paying $10 in commission. So just remember that I'm only paying $1 commission. It's $8 for me. A few $1,000s minimum go into each of these. But remember, if you have a smaller account capital, if you pay $5 or more for commission, stick to just some of the best setups. And even though they're the best setups, it doesn't mean that they're riskless. But ATRA, ANAB, if it wouldn't be gapping up, and SKY are kind of your setups that are safe. FSCT kind of is, but it's an IPO with limited trading history, so you got to deal with it. You don't know what can happen there. But the other ones, that's kind of what you look for. NKTR is extended, so you don't really want to load up on that. EGAN, too big of a one-day price move. You don't want to load up on that. RFIL, same situation. So once again, not ideal, perfect signals, but good enough to take and good enough to see if they work. If they don't, tiny cut losses, rinse and repeat.